You might be surprised to hear that the FTSE 100 just hit an all-time high, but then immediately pulled back. Why? Let me break this down. Because what's happening in London's stock market isn't just about numbers on a screen. It's a window into a global tug-of-war between old-world stability and the chaotic frenzy of AI hype. Let's unpack this. Here's the headline. The FTSE 100 briefly breached 10,951 points, a record before flattening out. But here's what the headlines aren't telling you. This isn't a story of British economic dominance. It's a story of avoidance. The UK's index, packed with oil giants and banks, has dodged the AI bloodbath hammering Silicon Valley. Meanwhile, the S&P 500 is stumbling, and the Nasdaq just entered correction territory. Why? Because investors are panicking over whether AI's trillion-dollar bets will ever pay off. Personally, I think we're seeing the first cracks in the AI euphoria that's propped up markets for 2 years. The FTSE's win isn't a win. It's a retreat to safer, boring assets while tech implodes. Now let's talk about Apple. Yes, Apple. The company just became the second ever to hit a $5 trillion valuation. That's more than the entire London stock market. But here's the twist. Apple isn't even in the FTSE. Its success highlights the absurdity of this divergence. The FTSE's big gains come from dividends and buybacks. Standard Chartered, Reckitt Benckiser, and Rio Tinto are handing cash back to shareholders like it's 2010. It's a safe haven play, but safe from what? From the very future everyone's betting on. What many people don't realize is that the UK market stability is a symptom of stagnation, not strength. It's the financial equivalent of hiding under a blanket while a storm rages outside. And that storm? The AI sell-off. Semiconductors are getting crushed globally. Why? Because the AI gold rush is running out of gold. Companies are burning cash on data centers and chips, but nobody's asking how they'll profit long-term. The Magnificent Seven, Apple, Microsoft, Nvidia, carry the Nasdaq's weight, but how sustainable is that? From my perspective, we're in uncharted territory. The FTSE's resilience isn't a beacon of hope. It's a warning. When investors flee innovation for dividends, it's not confidence. It's surrender. So what's next? Microsoft's earnings drop soon and Apple's follow. If they stumble, the domino effect could be brutal. But here's a thought. Maybe the UK's safe sectors won't stay safe forever. Energy prices swing wildly, and banks are never truly crisis-proof. The £217 billion in UK buybacks and dividends sounds impressive until you ask. Where's that money coming from? Selling assets? Cutting R&D? This isn't growth. It's redistribution. Let me leave you with this. The FTSE's record high feels less like progress and more like a market shrugging off the future. But can you blame investors? When AI's promises feel increasingly speculative, maybe boring is the new bold. Or maybe we're just delaying the inevitable. What do you think? Is the FTSE's strength a smart pivot? Or a slow burn?